flashing Wall Street tickers, traders flashing stock graphs. After months of red-hot growth, Wall Street is hitting turbulence, and this time the fear is centered around AI stocks. Top tech names like Nvidia, AMD, and other semiconductor giants, once the unstoppable winners of the market, are now under pressure. Analysts are asking a sobering question: is the AI bubble starting to burst? Charts showing Nvidia and AMD stock rising steeply in early 2025, then sharply dipping in July. The rise was meteoric. Fueled by the AI boom, companies like Nvidia saw their share prices bubble or even triple over the past year. Investors poured billions into AI infrastructure, semiconductors, and code platforms, hoping to cash in on the future of artificial intelligence. At one point, Nvidia briefly surpassed Apple and Microsoft to become the world's most valuable company. But now, the momentum is reversing. Nvidia stock is down over 15% in 2 weeks. AMD has fallen near 12%, and even AI software leaders like Palantir and C3 AI are seeing steep correction. Analysts debating on CNBC headlines like AI bubble fears grow and tech really losing steam. Analysts say the sell-off is driven by a mix of profit-taking, valuation concerns, and the fears that the AI market has overheated. Tech analysts say that a lot of these companies are priced for perfection. Any hint of slowing growth and the stocks get crushed. Some investors are starting to worry that AI really has all the signs of a speculative bubble. Soaring valuation, massive retail hype, and a flood of cash into a narrow set of stocks. Sound familiar? Many are drawing comparisons to the dot-com bubble of the early 2000s, when tech valuation soared on hype, then crashed when profit failed to materialize. Inside data centers, servers, AI chips being manufactured. To be clear, AI itself is not going away. In fact, demand for high performance chips and machine learning infrastructure is still growing, but Wall Street is starting to ask how much future growth is already priced in. If companies like Nvidia cannot keep up their record-breaking earnings speech, investors could start to reprice the entire AI sector. That means more volatility and potentially a broader market pullback. Adding fuel to the fire, interest rate uncertainty. While inflation is cooling, the Federal Reserve has not yet committed to cutting rates. Higher borrowing costs tend to hit growth stocks like tech the hardest, especially when their valuations are based on future profits. And with global growth forecasts softening, some traders are rotating out high-risk tech and into defensive sectors like healthcare, utilities, and consumer staples. Global market footage: Tokyo, London, and Frankfurt. The volatility is not just in the US. The global tech markets are also overwhelming. In Asia, Taiwan Semiconductor in Manufacture Co., a major Nvidia supplier, reported softer than expected guidance. In Europe, ASML warned of short-term uncertainty in chip demand despite long-term optimism. Investors are now watching earnings season closely to see whether AI companies can deliver real performance or if the hype has finally outpaced really. Financial influencers on social media, Reddit forums, retail investors. Meanwhile, retail investors, many of whom rushed into AI stocks over the past years, are grappling with a tough decisions: hold, sell, or double down. Retail investors say that all AI in the future. Retail investor: AI is the future, but I am not sure I can so much red in my portfolio right now. Market sentiment is shifting, and that uncertainty could lead to even more wild swing in the days ahead. Wall Street bell ringing, data centers, stock graphs, pulses red and green. Is this a healthy correction or the start of a border crash? The truth is, no one knows for sure. But one thing is clear, Wall Street's love affair with AI is entering a more cautious, volatile phase. And for investors, the next few weeks could be critical. For more updates, market updates, and expert insights, please subscribe